Hello to everyone and welcome to our new free video analysis where I will walk you through some of the charts and I will update some of the wave counts since our regular webinar that we had this Tuesday. So as you know, firstly, the US CPI data yesterday, it came out softened more than expected at 3%. But today we got the producer price index, which actually ticked higher. So it's a bit of mixed price action. So I would not be surprised if maybe US dollar or US yields will see some kind of a correction here in the near term. Now, before we go to some of the FX Elliott wave charts, let me just also bring this to the table that yesterday major market rotation happened and big names, money flows from big names to small caps. So actually this caused some interesting reversals on major indices. And if today, okay, at the close, we will also have another red day, then in my opinion, there can be deeper correction on stocks going into the next week, because usually on a Friday, especially if there is a strong sell-off, then this Friday flows can also continue in Monday and Tuesday sessions. So what we have seen yesterday is rotation into small caps. So Russell 2000 is making some very nice move to the upside. But when looking at the S&P 500, which by the way here still shows the bullish interpretation, one of my wave counts, even this one shows that there can be some correction in the near term, usually for 23 or 38.2% back into the area of a previous fourth wave. So even this bullish interpretation suggests that maybe there will be a period in the next few weeks when market will stabilize, slow down and pull back a little bit. So if this correction would unfold, it should do it in three waves before we will see a next push to the upside, ideally after this summer. So when you have this potential correction in mind, just keep in mind that this can also impact cryptos, okay? Cryptos are some slow, not really that strong just yet. There can be trying to build a base, but if suddenly there will be more selling off happening on stocks, this means that even cryptos will most likely continue consolidate even further. But still, later this year, that's when we will be expecting a new turn to the upside. Also, watch out at Nasdaq 100 and Nvidia. Now, Nasdaq 100 can also step in this corrective territory much better. Interesting support is still a little bit lower. Looking at Nvidia is testing the key trend line support. So again, if today will be the bearish day for stocks, I think that more damage can be seen going into the next week. So, but still, this can be all within the context of the broader higher degree uptrend. But I think that to join this trend, it's much better and safer to do it at lower levels, especially once you will have an ABC structures from the highs. Unfortunately, that's not the case just yet here on Nvidia. So if there would be some kind of a stocks sell-off, risk off, or maybe just sideways consolidation, it maybe can be something similar here on dollar index as well. We've been saying the dollar index is most likely headed to the downside because of this wedge formation, and that we are looking back for 104 level that can be even broken after the next pullback. So if stocks would really be sideways here or maybe make a deeper pullbacks, then be aware of dollar rally, but just short term. Okay, ideal resistance for dollar would be at 104.80 to 105. Okay, so that would be the next resistance. If we will see a straight sell-off from current levels, then of course you should be waiting on the next free wave rally. Whenever this one would occur, then of course if this 104 would be broken, then this will be your next resistance. So it really depends how market will react in the next few sessions. We'll see maybe a break through the supports by the end of the day, by the end of the week, or maybe will further weakness on stocks send the dollar a little bit higher, but all within the context still of the bearish trend. Also, keep in mind that US yields longer term, we are still looking and expecting much more weakness. Wave C, as you know, if this one has really started here unfolding down from April highs, well, there is a plenty of room to see this market trading even back to this December of 2023 lows, especially if there will be more evidences that Fed is going to cut rates. But for now, if we'll see some short-term rally, it's because PPI producer price index are not really matching with the CPI. Okay, so it's a bit of mixed data. Now looking at the dollar yen has seen a pretty strong sell-off because of intervention at the same time when the US CPI data was released. So it looks like that Japan is trying to push the markets in the direction of the momentum. So there can be more downside behind this move. As you know, I have been looking for this potential ending diagonal here, a wedge pattern, and we are now just testing this trend line, which maybe can be broken, because if you look maybe on closer on a smaller time frame, well, with the current sell-off, there is a chance that the drop from the highs is even in 5 waves. Okay, firstly I thought that maybe this could be an alternate scenario for wave X, but since we are seeing this new swing low just printed today where there can be 5 waves from the high, so meaning that there can be deeper correction, more downside after the next 3 wave rally. Even if we look here at this 4-hour daily time frame, the second wave count, well, even this, which shows that there can be ongoing wave 4, well, even this wave 4 is then incomplete. Even if it's part of a bull run, still fine, it's most likely send us even lower back to this triangle pivot here around 155.60 or so. So dollar yen looks like that there can be more weakness, especially if the US yields are really headed to the downside. Finally, if Fed will finally cut rates later this year. On the other side of the coin, Japan could hike rates, and this bank divergence could obviously make an interesting and very strong shift on the dollar yen trend. Now, finally, let's take a look on gold. So on gold, as you know, we've been calling this correction for a while, away from that April or May highs. It really depends how you label the wave structure, but overall, we're seeing the prices in a fourth wave pullback. So far, we are seeing some very nice push to the upside. So I think that fifth wave could actually already be happening. If you look closer here on the 4-hour time frame, we came out of this contracting range, and so far we are trying to build higher highs and higher swing lows, which means that the bull run is strong. But of course, I'm aware of some pullbacks, especially if there would be some risk of, if US yields would really stabilize next week, at least short term, there can be some deeper pullbacks on metals as well. So if we get a pullback, I think that there can be some interesting opportunities on the long side. I think that 2390 obviously is the first support, but since we may step into deeper wave 2, I would be watching levels around 2350, 2360 to be ideal support. That's also the area of this swing high as well, going back to June 21st. If suddenly, let's say, that drop would be much more aggressive, then who knows, maybe we are still in a wave 4 triangle here. But what's good about this one is that even after deep pullback for a wave E, you would be expecting this rise after we reach the lower trendline support here. So even this different interpretation, at least for the short term where deeper pullback is allowed, even this interpretation suggests that metal sooner or later should reach new all-time highs. But when look at this wave count, I just think that there is a chance maybe to get these lower, even better levels before you may potentially join this trend while the market holds this support from June. Traders, I hope that you love this content, love the video. Please make sure to subscribe to our channel, put your notifications on, leave me a comment below this video, and also make sure to check our website wavetraders.com, where you can apply for a trial. Okay, traders, have a good day, have a nice weekend, and talk to you soon. Bye.